We want to take you now to Wall Street. The markets are open for the first time this year, and it is already not looking very good. You see there, the Dow Jones is down almost, 200 points, triple digits.
Yeah, it's already triggered. It's all rather triggered by some global uncertainty. We're seeing big sell-offs in stocks in China, Japan, and Europe. So Belpointe chief strategist David Nelson is on the phone with us now to tell us what is going on. David, this is not a great way to start the year.
No, it's not. It looks like a pretty rocky start this morning. A lot of stocks haven't even opened yet. This comes on the heels, really, of a worldwide sell-off that was in part triggered, as you mentioned, by a trading halt in China. That came following some weak economic data there, manufacturing data, a weak currency, and that triggered the sell-off around the world. And if that wasn't enough, we're getting some geopolitical concerns out of the Middle East. Both Saudi Arabia and Bahrain broke off diplomatic relations with Iran following the execution of a prominent Shiite cleric. And that, of course, brings up that Shia-Sunni dynamic again. And, of course, the markets hate uncertainty, so we are seeing this sell-off hit us here on our shores.
So, David, over the next few hours here, I mean, as people continue to look at those numbers and start to feel, perhaps in some people's mind, a real sense of, I don't want to say panic, but concern over this. What does this mean for U.S. investors?
Well, look, I would say how the market closes today is probably a lot more important than how it opens. Look, we have some pluses and minuses here in the United States. We certainly have some challenges. The Fed is hiking rates right now. That tends to put some pressure on multiples. Oil has been a blessing and a curse. We get a benefit at the pump. But if you live in an energy-producing state, you're starting to feel a pain. I would caution investors, don't overreact to this type of news. We're going to have a lot more days like this ahead. Earnings estimates for this coming year, 2016, look to be up about 7% year on year. Last year, earnings were flat, so it's not surprising that the major indices were flat last year.
So then where are people putting their money, or where should they be putting their money?
Well, look, most investors should be invested in a broadly diversified portfolio, or at least get somebody to help them put that together if they don't already. I'm not a real fan of the index because I think the index itself is challenged. The tide isn't going to lift all boats here in the United States. I'll give you one sector that investors could focus on as maybe an insurance policy for their portfolio. I think defense stocks will hold up pretty well in 2016. Just pick up the newspaper, look around the world. You can see that defense spending is likely to go up, and they tend to go up even after a terrorist attack here in the United States. So there are pockets of strength out there, and I would have investors focus there.
I wonder, David, if you could just talk a little bit more about the connection to China, because I think for some people that, of course, was a headline last year when we
Summertime.
And when we saw a lot of nervousness over what was happening in the markets there. And at the time, the advice sort of was, well, don't worry, we're looking at obviously the long term for your typical individual investor anyway. And for the most part, you should be in a portfolio that is well diversified to insulate you from these kinds of gyrations. However, down 350 points. Can you just explain? So manufacturing essentially was down in China. There was a drop of 7% that triggered the so-called circuit breakers, right, to shut down trading in China. Is that right, David?
That's correct. And they've been kind of manipulating the market, and they've been using trading halts like this. We have our own set of circuit breakers here in the United States, but they seem to use them far more often, and they're actually trying to pump up their market. Look, I'm not going to sugarcoat it. China is a very important market. It is the world's second largest economy, destined to eventually become the world's largest economy. Just simply look at the demographics there. Unfortunately, for U.S. portfolio managers and U.S. investors as a whole, China tends to be an opaque society, and it's difficult to get numbers out of there. And it's pretty clear that they have their own designs on how they view the world, and I expect increased tensions between the United States and the U.S. as we butt heads over things like cyber terrorism, cyber intrusion, and even over areas of the South China Seas, which they seem to claim, and the United States doesn't abide by their rules. So it's an uneasy dynamic right now. So we're taking it one stock at a time.
All right, hopefully that doesn't mean even more volatility in the future. David Nelson, thank you so much.